do. I was coded in that way that my neurolinguistic engine will analyze the phrases, and I'll understand when I'm enumerating something, when I have to emphasize a word, or I need to take a deep breath. But you don't have to worry about any of these things. With Speechelo you can generate as many voiceovers as you want with only 3 clicks. Yes, you heard me right. Only 3 clicks. Click number 1. Just paste the text you want to be transformed into speech in our online text editor. Click number 2. Choose the language and voice that you want to use. We offer male, female and even kids' voices. And finally click number 3. Click on generate and in 5 seconds your voiceover is ready to be downloaded. How cool is that? And you didn't have to pay a single cent. And didn't have to wait a week to receive your voiceover. We offer voices that are perfect for training videos, voices that are perfect for presentation videos, and voices that sound like Hollywood movie trailers, and even kid voices that sound joyful and innocent. All our voices have elements that make a voice sound real, and include all the voice expressions needed to make people more engaged in your content and make it sound professional. Actually 98% of the people hearing a voiceover generated with Speechelo can't tell it's not a real human voice. This video is created with a voice from Speechelo and you are still here, watching and listening to what I have to say. That proves my point. So here is the deal. For a limited time, you're getting the deal of a lifetime. Normally we will sell Speechelo as a monthly recurring service. But today, because you are in the first 1,000 people to join, you get the special founders offer. You can get Speechelo for a ridiculously low one-time fee and no monthly recurrings. The price you see on this page is the lowest it'll ever be. In fact, the price increases with each minute that passes. If you want to lock in the price, don't refresh the page, don't bookmark it for later, just go ahead and click the Buy Now button below, right now. Once the launch ends, the price shoots way up. But, honestly, even at $500 that's an incredible deal for the power you're being granted. You will make that amount back in no time. Outsourcing the creation of a single voiceover will cost you more than the price of this offering. And you will have to wait after the freelancers, not to mention that you could just don't like the end result. And you will waste hundreds of dollars in vain. I'm 100% confident that you will love Speechelo. In fact, I'm so confident that I'm going to make this a complete risk-free decision for you. If you create a voiceover using Speechelo and you don't like it, I will refund all your money and let you keep the voiceover that you created. So, now that you have no risk, you also have no excuses. Go ahead and click the Buy Now button below and profit from the one-time payment offer, and the huge discount that we have for the first 1,000 users. Let's quickly recap why you should get Speechelo today. You'll be able to transform any text into speech. You'll get over 30 human-sounding voices. You'll be able to create voiceovers in over 23 languages, and you'll be able to create as many voiceovers as you want. Well, what are you waiting for? Click the Buy Now button below and profit from our special offer right now. And remember, you are covered by our 60-day money-back guarantee.
Hello?
Good morning, sir. The management has requested you to work from home until further notice. Thank you, sir.
Thank you.
जिंदगी की रेस ने किया कभी आगे कभी पीछे ऐ जालिम दुनिया अब तो जीने दे जीने दे जीने दे ना जीने दे जीने दे ना जिंदगी जीने दे जीने दे ना जीने दे जीने दे ना जिंदगी आज मैं भी हूँ आजाद मेरा वक्त भी है साथ कल की परवाह में नहीं जी ले चल आखिरी बार छोड़ छाड़ के दुनिया सारी तोड़ मोड़ के कसमें सारी खींच विच के सारी लकीरें छोड़ छाड़ के दुनिया सारी तोड़ मोड़ के कसमें सारी खींच विच के सारी लकीरें तोड़ दो सरहदों को छेड़ दो जंग प्यार की खोल दो अरमानों को आने दो ख्वाबों की बारी जीने दे ना जीने दे ना जिंदगी जीने दे ना जीने दे ना जिंदगी बीते लम्हे तेरे पास आ जाऊं मैं इतना मुझे तू याद कर गुजरती है मिलके सुबह जैसे शाम से तू भी कभी तो मुझसे मिल क्या इरादा तेरा कभी तो बता यूं ही इंतजार में तेरे रहूं यूं ही मंजिलों को देखता रहूं जीने दे जीने दे जीने दे जीने दे जीने दे जीने दे ना जीने दे ना जिंदगी जीने दे ना जीने दे ना जिंदगी छोड़ छाड़ के दुनिया सारी तोड़ मोड़ के कसमें सारी खींच विच के सारी लकीरें छोड़ छाड़ के दुनिया सारी तोड़ मोड़ के कसमें सारी खींच विच के सारी लकीरें तोड़ दो सरहदों को छेड़ दो जंग प्यार की खोल दो अरमानों को आन दो ख्वाबों की बारी जीने दे ना जीने दे ना जिंदगी जीने दे ना जीने दे ना जिंदगी जीने दे ना जीने दे ना जिंदगी जीने दे ना जीने दे ना जिंदगी
Global markets never sleep, so stay connected with Francine Lacqua in London, Matt Miller in Berlin, and Kaylee Lines in New York. Perspective on the day ahead. Bloomberg Surveillance, early edition. Weekday mornings on Bloomberg Television.
Good morning, everyone, from Bloomberg's European headquarters. Just gone 6:30 a.m. in the city of London. I'm Danny Berger with Manish Cranny live in Dubai. This is Daybreak Europe. Here's what you need to know. Jay Powell holds the line on inflation. The Fed's John Williams says any talk of tightening is still a way off. China can't cool the commodities market for long. That's the take of outgoing boss of Glencore, Ivan Glasenberg. Plus, Hong Kong starts the first trial under its new national security law. That's raising questions about the city's independence and its future. Manus, good morning to you. I have to say, whenever I come in, one of the ways that I kind of gauge what's going on is all the plethora of strategist notes I get in. And so few were talking about Powell yesterday. So many, and these are macro guys I'm talking about here. We're talking about Bitcoin. What a wild ride it went on yesterday, falling 10%, gaining 10%. That's actually the 5th time, though, that it's happened this year. It's not unusual to see that kind of volatility.
No, and it is gut-wrenching, and it's whether you've got the, I suppose, the wherewithal to stomach it out. Sub $30,000, that's a flag. Scott Minerd says, look, it could trade down to $20,000, but yes, there's a longer-term story. We know Mike Novogratz was at the Qatar Forum, and he said, look, I still prefer Bitcoin to gold. Of course, these people are, in some ways, talking their book, and that's fair enough. Everybody's got a book to talk. As you know, I'm a bit obsessed with Jeremy Grantham at the moment. He says that Bitcoin is an asset that resembles the NASDAQ peak of the dot-com bubble. But I love what he says about meme investing. Okay, get ready for this. Meme investing is the biggest US fantasy trip ever. He calls it nihilistic kind of investing. So I know the two words are different, but this is huge ball.
Yeah, and that kind of idea, that kind of proclivity to bid up both Bitcoin and meme stocks, I know it's not always the same investor base, but it does have a lot of crossover. So it's interesting to see perhaps meme stocks continuing to get that flow while we get volatility in Bitcoin. I thought this was really interesting. This is from Bespoke Investment, who points out that currently we're about 48% down from the high in Bitcoin, and that is very typical. The average drawdown from the high actually is 48%. So look, if you're into meme stocks, you're into Bitcoin, this is the picture you get, Manus.
Yep. Well, we certainly know that it's going to be low rates for a lot longer, or longer than we all choked up on last week. Let's talk about the markets, Danny. You've got NASDAQ, a little bit of a better tone on some of these equity markets this morning. NASDAQ and Asia stocks up 0.3%. The dollar firming a little bit. Williams really giving us the message from the Fed. Williams, Daly, Mester, Powell. I think it was you said that one or two analysts had said that they lost an hour of their life. But the message was clear, which was we need to talk about taper and not about hiking rates. And that is what perhaps has assured the equity market and the bond market a little bit. There's Bitcoin up 3.34% at 34,000 and change. Let's talk about the banks. Deutsche Bank's top Qatari shareholder has signalled his backing for consolidation in Europe's financial services industry. The former Qatari Prime Minister, Sheikh Hamad bin Jassim Al Thani, spoke to Bloomberg's Simone Foxman, and she asked about consolidation in the European banking and how inevitable was it?
I think it should happen, because if we compare the European bank with the American banks or with the Chinese banks, we'll find that they are too small to survive by themselves. And I think emerging is important between them. Is it now? Everybody waiting to have a better valuation to think about merging. But I believe to merge now is better, because the market is being taken by the big bank, the giant bank in Europe. And if they don't do something quickly in Europe, in European financial, I think they will have difficulties to compete with the American and the Chinese. Already they have difficulties to compete with them, but they will have more difficulties to compete with them.
Do you think that Deutsche Bank, something of which you are a shareholder, do you think Deutsche Bank should merge with another lender?
Well, I am not in the board, so they have to decide, but I'm saying what I think. And I believe that mergers is inevitable.
And the Qatar Ministry of Commerce and Industry, the Investment Promotion Agency Qatar, and the Media City Qatar are the underwriters of the Qatar Economic Forum, powered by Bloomberg. Plenty to discuss then with Magdalena Stoklosa. She's Morgan Stanley's head of European Banks Research. No hard job here for you, Magdalena. Let's get straight into it. Listening to the Qataris, they own a lump of Deutsche Bank. I know you can't talk about individual names, but are you expecting a major consolidation moment in the European banking landscape? Has he got a point?
Yes, I think he's got a point. I'm a huge fan of consolidation myself. And I do believe that we have kind of started already, because even kind of looking at kind of transactions last year, I mean, let's not forget, we have created a 20% market share bank in Spain with the merger of Caixa and Bankia. We have created the 20% bank in Italy with Intesa Ubi. So the ball started rolling at quite a scale, I have to say already. Of course, you can argue, listen, these are all domestic transactions, but I think it's the start.
And of course, this is coming out of a crisis where regulators are keenly attuned to what's happening at banks. To what degree are there regulatory hurdles, or is that environment supportive?
So that environment has changed quite a lot. I think particularly over the last 18 months, when ECB kind of came out with a kind of much clearer rules of what they expect from the mergers. So I have to say, it's almost like 18 months ago, kind of historically, it was all about too big to fail. We were all kind of worried about the large institutions. And kind of now, it's almost big is beautiful. We are encouraging larger institutions, because I think it became very, very clear that it's a business model discussion. And very often, kind of a merger is the only way to truly improve fundamental profitability of the banks, which of course, they are quite kind of hampered by the negative interest rate environment. And that cost kind of line seems to be the flex that can improve those kind of returns going forward.
Yeah, and it seems to be that banking, you can almost steamroll through structural changes and get the synergies, unlike the cultural dilemma that you have in some other mega merger platforms. I looked at your notes and you were talking about bumper payouts, and I stood back and maybe I'm just the only one in shock. Eurozone dividend yield over 5%, the Nordics 11 to 15%, but my gosh, the UK are going to pay out over 20%. Do you think these dividend delayed and buybacks are already reflected in the equity pricing?
No, so I don't think so. I think that's why I'm quite constructive on the banks. I still have about 10% upside to the sector overall, because I think that, as we've all know, there are still limitations on the payouts, which are supposed to come off at the end of June in the UK and at the end of September in Eurozone. And that kind of paves way for those extraordinary kind of payouts, both the kind of make-up payments in the fourth quarter kind of this year, and of course, much more normalized in 2022. And despite the fact that it's actually been quite clear from a kind of regulatory perspective, I think there's a part of the market that waits for those actual limitations to be lifted.
We do have Kepler analysts downgrading European banks yesterday, and part of their argument, they don't talk about dividends as much as you do, Magdalena, but they do talk about the reflationary trade being on pause, that the yield curve, the end of the steepening has happened for now, and that's why they're downgrading it. Does that factor into your view at all here, or are you still bullish despite that?
So of course, it's a huge factor in our view as well. But I think that there is something kind of bigger than the reflation trade, which I actually am quite skeptical about as well. It's what I call the credit cycle trade, because ultimately, what is going to drive the bank's earnings, drive the bank's book value per share growth, and ultimately those tremendous dividend payments is the fact that the provisions are coming down, and that's a trade on a tremendous tightening in the credit market and also the reopening of the economy. So despite the fact we're not going to get rates increases, and that's particularly in Europe, and it was never a part of the thesis, the credit cycle and its huge impact on earnings. I mean, the earnings momentum of the banks is very, very high in 21. On my numbers, 60% up kind of year on year, then about 15% up in terms of earnings in 2022. So I'm playing this kind of big reopening credit cycle and the dividends. I think the rates, I agree, are a little bit of a disappointment, but I think ultimately it's about that real macro strength into next year.
Magdalena, let's talk about the other aspect of banking, the digital euro, the advent of that, when it will come. And I suppose, how does that play out on the landscape of European banks? Is it that there will be some major players that will be the delivery mechanism of a digital euro? How will it impact the market?
So I think that, of course, we haven't yet kind of heard truly from ECB how they're going to structure the digital euro. But I think we know enough to be able kind of to talk about the impact on the banks. And I think the impact on the banks is actually going to be quite small, because ultimately we seem to be talking about the limit of about kind of €3,000 per person that we're all going to be allowed to kind of hold within the kind of euro. And of course, you can argue that even if the public has converted all of their kind of into those euros out of the bank's deposits, the bank's deposits would have come down by about 8%, which I think, in the environment we've got at the moment, which is this huge excess liquidity, particularly after last year, is actually counterintuitively positive for the banks. The mechanism, I think the vast majority of the banks will be running effectively the version of the kind of digital wallets to hold. What ECB will decide will be that kind of euro limit per person.
Magdalena, I also want to get to your other piece of new research you just put out about growth and competition in the asset management industry. One of the things that struck me was you talked about the need to grow in the crypto space, that this driving the landscape of the industry. And of course, this happens as crypto looks very volatile. So what form do these type of products take place given that volatility?
So, Danny, this is actually the interesting kind of part. We thought when we kind of looked at key things that were likely to kind of grow and really impact wealth and asset managers over, let's just say, the next cycle, we kind of thought private markets, ESG, cryptocurrency, and of course, crypto assets in general, and of course, kind of customization. And we have talked to literally kind of 20 CEOs, CIOs of the large kind of wealth managers in Europe. And what was very, very clear is that the offering of crypto assets is it's in its absolute infancy. In Europe, there was no large wealth manager that would offer kind of crypto assets trading or even crypto assets custody to its private banking clients. In the US, it's different. You've got Morgan Stanley, you've got Goldman Sachs kind of already kind of offering at least custody and some level of trading. In Europe, it is still seen as a huge KYC issue. Kind of regulatory side is yet so uncertain that the banks kind of feel they're losing out, they know, but they're not yet ready to offer crypto as a product, even as a holding.
Yeah, always always that game of catching up, certainly. Sorry to cut you off there, Magdalena. I'm afraid that's all we have time for. Thank you so much, Magdalena Stoklosa, Morgan Stanley, Head of European Banks Research. Now let's get to the first word news with Annabelle Jewelers. Good morning, Annabelle.
Thanks, Danny. Well, on the 5th anniversary of the Brexit deal, no deal's been reached in the so-called sausage wars. But officials on both sides are sounding increasingly optimistic that they will avert a trade war. The UK has asked the EU to extend a grace period on the sale of chilled meats and sausages in Northern Ireland from the rest of the UK. Sources say an extension beyond the end of June looks increasingly likely. Former New York Police Captain Eric Adams is leading the first round of counting in the city's Democratic mayoral primary. With about half of precincts reporting Adams had about 30% of votes. Tech entrepreneur Andrew Yang has quit the race after the early results, saying he's a numbers guy and is not going to be the New York City mayor. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Manus?
Annabelle, thank you very much. Yes, my friends at home are rushing out to stock up on sausages. Sausagegate in Northern Ireland. Coming up, the rush for riches. We take a look at the varied ways in which insiders have used SPACs to boost their fortunes. More on today's Big Take, right here on Daybreak Europe. This is Bloomberg.
Who work inside of corporate America care about these issues, and certainly we see that with just the broader community.
There's not enough tax in the world for private sector to pay for all of this. It's going to have to be a public-private partner.
Valuations, particularly sort of technology landscape, have gotten to some pretty extraordinary levels. So I think it's not a surprise. I don't think it's any indication of the beginning of the end, but I do think markets don't like uncertainty.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
Good morning, everyone, from Bloomberg's European headquarters. Just gone past 6:40 a.m. here in the city of London. I'm Danny Berger, Manus Cranny. Beside me, live from Dubai, this is Daybreak Europe. Here's what you need to know about the latest big take from Bloomberg. And let's talk about SPACs and the boom that they've enjoyed really since the beginning of the pandemic. Going back from early 2020, more than 470 blank check firms have gone public. That means that they've raised more than $150 billion. Today's Big Take looks at how insiders have raced to push businesses into the public's hands and the range of maneuvers that they're employing to boost their fortunes. For more on the SPAC craze, let's get to Bloomberg's finance team leader, Tom Metcalf, who joins us now. Tom, exactly who is benefiting at this point from the SPAC craze?
Well, that's the point of the story, is that the one people you can say are benefiting are the people who sort of created these things and sort of have these vested interests in these structures. So the story today, which is from my colleague Heather Perlberg, looks at three examples of how three different sort of tycoons are doing extremely well. So you've got a guy called Michael Klein on Wall Street, Howard Lutnick, who folk will probably know from Cantor Fitzgerald, and then a Texan billionaire, Tillman Fertitta. And the story just explores very different ways that they, let's say, creatively made the most out of these structures.
Where are we in this cycle? Because at the Qatar Economic Forum, we're talking to some of the lead investors there. They're saying, look, this is a frenzy. It's got a little bit out of control and perhaps a little bit frothy. What are you hearing?
Yeah, I mean, if you look back to 2020 and early this year, I mean, it was absolutely a frenzy, very frothy, and it was really remaking the league tables. So a bank like Credit Suisse, which has a very big SPAC advisory arm, suddenly vaulted up, into the sort of rarefied heights of the top 3 or 4 advisors. I'd say the market has recalibrated slightly in recent months. So I think, by some indexes, it's down about 20%. But this is from, recalibrated from extreme highs. So it's still very busy. There's still a lot of chatter. And, the big question is how can regulators kind of catch up if this is going to be a big central cog of the market? It's pretty clear that, the regulations might be a bit behind the times of it.
Tom, thank you very much. Tom Metcalf there, our man on the Big Take today. And the big drink from Pernod Ricard. They're boosting their full year recurring operating profits. So this stock's probably going to be in play at the open of the market, Danny. Of course, this plays to some of the big brands, Jameson being one of the best known names in that family. They say organic growth in profit from recurring operations for the full year. They see it rising by 16%. So the organic growth from recurring operations about 16%, and they saw 10%, the estimate there. So that's a little bit of a shift for them, raising the organic growth by about 16%. Keep an eye on that stock at the open. Coming up on the show, the energy transition. We talk a lot about it. Well, let's hear from some of the biggest names in the industry speaking at the Qatar Economic Forum. This is Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
This is Bloomberg Daybreak Europe. I'm Manus Cranny in Dubai. Danny Berger alongside me at London HQ. Some of the biggest names, Danny, in the energy world. They gathered at the Qatar Economic Forum yesterday discussing the transition to green and the role of gas and carbon pricing.
Gas is part of the solution for a longer-term transition.
We give a lot of emphasis in our strategy to natural gas, in particular LNG.
But certainly gas is going to play a really important role.
We need oil and gas to allocate part of the cash to greener energies, to renewables, and to make the transition real.
Carbon price is absolutely essential, but it's also absolutely insufficient.
Carbon pricing is important, but innovation as well, and policies are also very important.
Policy is going to play a very important role.
The majority of governments are taking this very seriously, but it has to be an integrated solution.
We also have to have policy and regulation that mandates things that are not going to be moved by just carbon pricing.
They're all in it for the gas with Qatar, aren't they, at the Economic Forum? They're the Qatar Ministry of Commerce and Industry, the Investment Promotion Agency Qatar, and Media City Qatar. They're all the underwriters of the Qatar Economic Forum, powered by Bloomberg. Danny, this all coalesces around their views as well on the oil markets. We've got a couple of big themes. You and I caught up with the Trafigura chief economist yesterday. The market's hungry for oil. Look at the draw. Look at the inventory drawdown in the States, over 7 million barrels drawn down. And you take that, and then you take Exxon, Shell, and Total, all talking about the prospect of $100 oil. I don't think the world will tolerate $100 oil.
No, and I kind of wonder if you square the $100 oil conversation with the energy transformation conversation. I mean, Manus, do you hear from a lot of the oil people you talk with about that causing peak oil? I mean, they kind of course, talk their book and talk about it like a positive, but at some point you have to imagine that that also weighs on what happens to the energy space.
Yeah, peak oil is something which they seem to draw closer and closer and closer to us, don't they, Danny? With electric vehicles, there was a big conversation around that as well. I love Patrick Piana. He's great at the total hedge. Yes, there's quite a chance of $100 oil, but then it'll fall back. But we're running into an OPEC Plus meeting, and I just wonder, will the Russians, Mr. Novak, make a call to release a few more barrels just for old time's sake?
Right, it's all about restraint at this point. We know the U.S. shale patch has been, very good in that regard, not releasing any more reserves. It does seem that that's what we need from OPEC, right? That restraint, Manus.
Absolutely, but then we know Prince Abdulaziz bin Salman wants to see the clear evidence of a strong recovery. So we'll see what they have to say as they run into that OPEC meeting next week. And Darren Woods at Exxon says the lack of investment is going to exacerbate supply and the dipness. So all to play for on the tight oil.
Definitely. It's very interesting to watch. That's it for Bloomberg Daybreak Europe. We have the European Open up next. This is Bloomberg.
Excluded from the workplace, especially when you've got skills and motivation and things to give, can have a really detrimental effect on people's well-being. They can become isolated, of course have the financial stress of not being able to support themselves. That might be their first entry into the broader community where you're building relationships with workmates, and so that's your exposure to culture and you're starting to feel like you belong.
Some people might need to practice their English more. They might just need just some practical experience in an Australian kitchen.
I have not from Australian friend now, but in the kitchen I have many friends.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
Good morning. Welcome to Bloomberg Markets, the European Open. I'm Anna Edwards, live in London. Mark Cudmore, our Markets Live managing editor, joins me in Singapore to take us through all of the market action this hour. The cash trade is just less than an hour away. Here are your top headlines. Jay Powell holds the line on inflation as the Fed chief leads a number of his colleagues in hammering home that the central bank is nowhere near raising rates. China can't cool the commodities market for long. That's the take of the man in charge of the world's biggest commodity trader. We bring you our exclusive conversation with Glencore's CEO, Ivan Glasenberg. Plus, 5 years on from the Brexit referendum, the UK and EU are close to striking a truce in their post-Brexit trade disputes. Welcome to the programme, everybody. Welcome to the European Market Open. It's just gone at 7 a.m. here in London. Later, of course, in Singapore, Mark is with us this Wednesday to tell us what the markets are saying to him. Good morning, Mark.
Good morning, Anna. Well, it's probably the most stable and balanced day we've seen since the Fed meeting last week. Obviously, since then, we've had a real roller coaster across assets. There's been a lot of confusion, but it seems like we're now settling down to a new kind of equilibrium in markets, and it's been marginally positive overall. I think that the Powell came out being dovish last night as kind of anticipated, as expected, but maybe less so than some people were hoping, which is why we are seeing yields drift a little bit higher again today. But overall, markets are pretty happy and coming to terms with the message we got last week from the Fed.
Yes, coming to terms with it. It's taken a week, hasn't it, Mark, for us to go through all of the thinking processes required and to come to terms with it. Let's just recap where we've been and look at where we are on futures markets then right now. Through yesterday's session, or to the end of yesterday's session, the European markets making gains, US markets making gains. Futures do suggest a little bit of stability, as you suggest then. In our thinking this morning, certainly in Europe, European futures look really quite flat. US futures look a little bit more positive, up by 0.2% on these various US equity markets. So Powell giving all the key messages, hitting all the points that you'd expected him to hit. Maybe the nuance is a little different, but he certainly was talking about transitory inflation, and he certainly was giving the message that they would be patient on rates. How has all that gone down through the Asian session? A bit of a continuation of the positivity we saw through the US yesterday.
I think that's absolutely right. It is a continuation, probably is the most appropriate word. Generally, we've seen equity markets and equities futures a little bit stronger, nothing exuberant. And we've also generally seen commodities strength kind of return to markets. You can see that there. Everything in the commodities column is green. Overall, we've seen a little bit of dollar strength come back into the market, which puts some Asian currencies in the back foot, but nothing dramatic there. So it's a quiet session, but quietly positive. And that's the message we're getting from the GMM.
OK, so let's think about what we heard then from Powell, Mark. And the obvious interpretation is the one I sort of gave, which is that he hit all those dovish notes, if you like, that transitory inflation, being patient on rates. But that's the obvious interpretation. You say that there's a slightly more nuanced interpretation, which compares how dovish he was with how dovish he could have been.
Yeah, look, we know that Powell is super dovish, and that's been very clear. And we knew that he was going to deliver a dovish message yesterday. So that bit wasn't the surprise. I guess there's more of an acknowledgement from the Fed, not just from Powell yesterday, but that was a key part of it, but generally in the last few weeks, that, hey, price pressures have come through, at least in the short term, much more powerfully than we anticipated. And I think that, you know, Powell is saying that, like, look, we still think it's transitory. We still think we don't have a major inflation problem. And he's not really changing his tone. But there's definitely acknowledgement of, like, look, if there's anything that went different than what we anticipated, it's that inflation is a little bit higher than we expected in the short term, even if we think it's just a short-term phenomenon.
Right, so that's the sort of at the margin new information, though, isn't it, Mark? And so that's why it's important. In terms of what we've seen, you say we spent the last week trying to come to terms with the Fed, and it certainly has felt that way. And as we discussed yesterday, a lot of this was to do with positioning going into the Fed as well. So we have to think about that. But in terms of where we've been on this long journey over the past week, many people drawing our attention to the fact that we haven't really moved very much at the top level when it comes to stocks. Is that, once again, just a very obvious story, and there is some more interesting nuance?
Well, I think that obvious story is really interesting in its own right. I mean, in a way, you could say the Fed has done an amazing job. They've introduced a little bit of optionality into their policy making. We've gone from absolute certainty that they would be dovish to they're very, very dovish, but when we don't have absolute certainty. Now, they maybe haven't introduced a massive amount of optionality, but a little bit. And yet, markets haven't been derailed. There's been no sign of the real taper tantrum here. Short term, it looked like we might get that last week. But a week later, markets seem fine. They've come to terms with this. It's all good. So I think that there is nuance even to that obvious story. But also, the second layer is that while some of the headline, 10-year yields and inflation expectations and equity markets are kind of back to where they were roughly a week ago, there have been some changes. First of all, the dollar has moved off those lows. I think that's quite important. And there has been a big impact on the rotation level and the sector level in equity markets. But overall, I think this has been a success from the Fed. They've introduced something new, and yet the market has not been derailed. And that's a good sign for the real economy and for markets overall.
Take us through the latest thinking on the spread of the virus and the vaccine rollout. We saw headlines just recently about the success that they're currently having in Japan and meeting expectations when it comes to the vaccine rollout, of course, starting from a lower base than some other developed economies, Mark. How much is this influencing the day-to-day of the people that you're talking to? Clearly, away from the human story, which is, of course, very real for many people. But in terms of the market narrative, is it still very much at the forefront of people's minds, the ones you're talking to?
I think because the human element, it's at the forefront of people's minds, but not in their decision-making. And what I mean by that distinction is everyone's talking about the virus still, the vaccine rate, any of those stories get a lot of interest, and particularly the more worrying stories about the spread of the Delta variant and when vaccine pace slows or when there's new restrictions. But ultimately, the backdrop is the global numbers continue to improve. China has given over 1 billion vaccines on the mainland. It's just we've seen more than 2.7 billion vaccines given globally. Just that the rates of progress in the vaccines are really impressive. And despite the increasing cases we're getting in some countries on this Delta variant, we're not yet seeing a major pickup in terms of fatalities or hospitalization rates. Yes, a little bit at the margin, but nothing drastic. There's no sign of returning to these kind of terrible days of Christmas in any of these markets at all. So I think that overall this is not driving market decisions, even if it's absolutely of interest on the story side, on the human side.
Yeah, absolutely. And the only thing I'd add to that, I suppose, is we are learning, certainly here in the UK, that it takes a lot of protection if you start getting greedy and you don't just want to save life, which clearly was the most important priority in the first instance, but you want to return to normal life. It takes a lot of protection to do that. We had data out earlier on this week showed 86.6% of the population in England have antibodies against COVID, and still we are not back to normal. We'll see how that path develops, and a lot to do has, of course, with the different variants and the way they behave. No doubt we'll return to all of these things. Just want to mention another story as we go to a short break then, Mark. Ireland to sell part of its stake in Bank of Ireland, and this, of course, takes our minds back. This takes us back to the financial crisis and the way that certain governments had to step in to take stakes in financial institutions, but we are seeing that, and so we'll keep an eye on banking stocks in that particular part of the world when it comes to the start of trading today. Coming up then on this programme, the bosses of some of the world's biggest oil companies joined major commodity traders and banks in predicting that oil could go as high as $100 a barrel. We hear from the CEOs of Total, Shell and Exxon Mobil. Plus, we discuss the threat of the Delta variant and what it poses, that kind of threat. What kind of threat does it pose to Europe's recovery? We'll talk to the president of the European Bank for Reconstruction and Development, the EBRD. She will be with us in the second hour of the programme. We'll also discuss how the bank is supporting businesses during the pandemic and fighting climate change. All of that front of mind right now. That's at 8:30 London time. Up next, we dive back into the markets and get reaction to Jay Powell's comments with Annika Trion from Van Lanschot Kempen. She'll be with us. If you've got any...
Greetings from The Edge, where doctors keep pace with patients, stores have psychic powers, and industries transform before your eyes. All made possible by HPE's Edge to Cloud platform.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
We will not raise interest rates preemptively because we think employment is too high, because we fear the possible onset of inflation. Instead, we will wait for actual evidence of actual inflation or other imbalances. A pretty substantial part, or perhaps all, of the overshoot in inflation comes from categories that are directly affected by the reopening of the economy. I will say that these effects have been larger than we expected. And they may turn out to be more persistent than we've expected. But the incoming data are very much consistent with the view that these are factors that will wane over time.
Right now, for the key issue for the FOMC is, when is the economy going to get to this point where we meet these, these conditions that we've set out in the FOMC statement about time for the liftoff of the Fed funds rate? That's still way off in the future. Right now, really, I think the attention is on the taper.
Those were Fed Chair Jerome Powell and New York Fed President John Williams. They both reiterated the Fed is nowhere near raising rates at the moment. The reassuring comments on rates, at least, have bolstered investor sentiment. Most Asian stocks are rising, with US futures this morning. Of course, a lot of the conversation was actually around tapering before we get to the conversation about raising rates. Annika Trion, head of the Competence Centre at Van Lanschot Kempen, joins us this morning with her thoughts and her reaction to what we heard from Powell and the state of the US economy right now. Annika, very nice to have you with us. So it seemed to take a week for the markets, as we were just discussing, Mark and I, a week for the markets to really understand what it is that the Fed was communicating. Is the reason for that, do you think, that we have this new reaction function from the Fed, this new average inflation targeting, and we're not really sure what that means in practice, even though Jerome Powell went out of his way, of course, to try and explain what that meant yesterday?
Yeah, and indeed, good morning. And indeed, the reaction to the Fed announcement, especially last week, Wednesday, was certainly unconventional. Look at the behavior of yield curves, credit markets in general. And to me, it sort of illustrates the fact that bond markets, which is, the oldest lesson in the book, watch bond markets, what are they saying? Bond markets were, already ahead of the curve here. Bond markets have been, flattening for the last 2 months already. And what was really remarkable is that despite these, what sounded to be rather hawkish statements on Wednesday, there was a one-day reverse in the flattening behavior. And then sort of, bond markets continued to flatten afterwards. And I think the point is that bond markets are questioning the sustainability of this sort of knee-jerk reaction of growth, inflation, etc., which is why there was certainly sympathy built into the markets when Powell made similar statements.
Good morning, Annika. But in some ways, that makes sense. If the market interprets the Fed as being hawkish, that should be a flattening curve. If you think there's going to be more rate hikes in the front end, that means you need less rate hikes in the long end. To me, the big surprise was, in fact, how much flattening we got. That's like saying that the Fed was very hawkish. And from what I understand, you think the takeaway is more that they're just less dovish. If that's the case, if you think they're just less dovish, which I sympathise with, rather than being hawkish, does that mean we should get a re-steepening in the weeks ahead? Or do you think the curve's got a new equilibrium here?
Well, it's a really interesting point. And I think that the curve is sort of on its own trajectory. And I think it's simply, as mentioned, I think it's simply the case that bond markets, market participants are seriously questioning this very overcrowded inflation trade that the markets have been obsessed by over the last 2 months. And there are several factors here. Now, I think as a consequence of that, it's then, well, how is the Fed going to react? And I would totally concur. The Fed is not hawkish. That's what they keep. That's also what they tried to reiterate again yesterday. The Fed is not hawkish. The Fed is, at the margin, slightly less accommodative. And they are talking about tapering. They're pretty outspoken there. Now, going back to what's happening, let's take a step back. Let's get objective. we have just come out of the worst recession in history, 2020. This year, we're set to enjoy the best growth rate that we've seen in almost a century, with exuberance in terms of inflation data, which, to Powell's point, is arguably distorted by this knee-jerk reaction of opening, but also outliers. Take lumber up 100%, copper at one point up 30%. And if you look at the sort of overcrowding of this trade, it's a remarkable height of overcrowding. The dollar, for example, had the largest short position in history. Long commodities, long copper, enormous heights there. And as the dollar, the most remarkable thing I would argue is the dollar, how rapidly it's starting to gain strength. That obviously has a very large spillover effect to other areas of the market, which again shun out this inflation trade.
Annika, let me just get your thoughts on stocks versus bonds, because this does seem, we talked about how we haven't come very far in the past week, actually, when you look at the stock market in the US. We were talking about this earlier, but actually the relationship between stocks and bonds, something seems to have changed under the hood there, and we're now back to that negative correlation. Do you think that is something that we will be able to rely on through 2021 in the way that we've not been able to up to now?
That's a great point. And I think if we go back to the basics again, what's happening with stocks? Why have stocks not reacted in a different way? Obviously, people expected quite a severe reaction in stocks, and that's not actually happened. And I think that, and we'll come back to the bond relation in a minute, but I think that boils down to the fact that this sort of constructive symbiosis between central banks and the stock market that we've gotten used to over the last decade, this is actually very much there, and maybe even reinforced by the Leib Warts and Protect.
Annika, thank you very much. Stay with us. Annika Trion from Van Lanschot Kempen with us this morning on the European Market Open. Let's get a Bloomberg First Word News update. For that, here's Laura Wright. Good morning, Laura.
Good morning, Anna. Sydney is to impose new restrictions, including compulsory mask wearing at indoor venues as an outbreak of the Delta variant spreads in the region. The US, meanwhile, looks set to undershoot President Biden's vaccination target. The White House says it will narrowly fail to get 70% of adults a first shot by the July 4th holiday. Former New York police captain Eric Adams is leading the first round of counting in the city's Democratic mayoral primary. With about half of precincts reporting, Adams has about 30% of votes. Tech entrepreneur Andrew Yang has quit the race after the early results, saying he's a numbers guy and is not going to be New York City mayor. Former Citigroup chief economist Catherine Mann is to join the banking policymaker from September. With previous roles at the World Bank and the OECD, Mann brings international experience to the Bank of England as it weighs when it recalibrates its easy monetary stimulus. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Mark, Anna.
Laura, thank you. Laura Wright here in London. Coming up on the programme, the outlook for the energy transition. We'll hear from some of the biggest names in the energy industry speaking at the Qatar Economic Forum. This is Bloomberg.